Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Thanks for joining us today on the podcast. And I've got someone back in the studio. It's been a gap of, I was trying to work it out, but it's 2+ years since it was last here. So hopefully he's going to regale us in some stories and daring do's of the world in property. Andrew Morello, how you going, Andrew? Are you well?
Very well, thanks. Thanks for having me back, and hopefully I've got something interesting to tell you.
Well, I hope so. We've waited so long. So so it's a lot of time, a lot of water under the bridge, I guess, to get moving. Probably people might be familiar with your name. You're the original Apprentice winner, weren't you?
Yeah, the original winner of the Australian Apprentice with Mark Burris. So been there the last sort of 10 years and held the sort of head of business development role, rolling out the retail network with the franchisees. Moved into more of a consulting role and doing some work with the Entourage Business Education now with Jack DeLosa.
Do people still pin you to the fact that you won the first Apprentice? Have you been able to shake that yet, or is it still always there?
The irony
is,
they still do. The irony is, and you saw me back in the day, and I probably look more like that now than I used to. So for those of you who are on a podcast, I can't see, but I've sort of went on a bit of a health change, and I look like I did back on the show. I was probably weighing in at roughly the same sort of weight, and my hair's shorter and my beard's shorter. But probably last time you saw me, I was a bit heavier and I had a longer beard and longer hair, and so I actually look like I did on the show 10 years ago now. So more people actually ironically have been recognising me more recently than they used to.
So you were pretty young when you first did that, right?
I did, 23, 24 when I started out with Yellow Brick Road, and then we've been around the property game my whole life and started in my property career. Literally, I was 17 when I studied my agent's rep down at Broadmeadows TAFE in Victoria,
there you go,
where the good old Eddie Maguire's from. So did that at 17 and then got into the industry at 18 and then always pitter-pattered around it and always been around it with regard to the families, always been involved in property. So, yeah, property finance and business education seem to be three things everybody needs.
Good thing to be involved.
Yeah, it's good solid networks, which are great.
So we'll get a little bit that today and sort of unravel some of the most recent sort of property experience you have. But you spoke about this bit of a health journey for you. It just went, stuff it, I'm just going to start looking after myself better.
Yeah, look, a friend of mine who I'd been doing some work with, a couple of friends actually, talked about their life change and the fact that, their family had gotten to an older period of their life and been very successful financially, but never been able to actually enjoy the financial success and travel and things with that because of their health issues. So that was one propellant. And then my mum and dad aren't 100%. Mum's got an early onset Alzheimer's and dad's had a stroke a couple of years ago. So it was just, I think it was time to, the realisation when you see it firsthand that I want to take advantage of the opportunities that the world has. And I've always had a philanthropic arm to everything I've done business-wise and personal. So a friend of mine said, why don't you, I sit on the board for Seed Foundation for Indigenous Education, and he said, why don't we go do Kokoda? And I saw it as a good excuse to, get my stuff together and make the magic happen, and went and completed Kokoda last year.
So it's a really good thing to chat about because, you can be the wealthiest man around and have plenty of cash, but if you can't do anything with it, enjoy life, and health's a key thing. And a lot of people get obsessed with property investment and they think that, the be all end all is how big your portfolio is and how you make money and stuff. But it's really the utility of what you do because of it is the key thing, right?
Yeah. So a lot of the work that I do sort of in the business coaching / motivational speaking space is around, I call it Morello's 30-second answer at 3 a.m. that if someone came to your house at 3 o'clock in the morning and asked you, what are you, and the answer wasn't good enough, then, you didn't get a chance to keep living on, what would it be? And I talk about the fact that Andrew Morello wants to make lots and lots of money to pay other people really, really well to do the things he doesn't want to do so he can do more things he loves doing with the people that he loves. And property's been a propellant for that for me and also an accelerator, and I'll continue to do so with that.
So what does Morello like to do? What's, so you got all the money in the world, but what would you be doing?
Well, it's interesting because I was asked that recently on stage in an interview. Someone said, if I'd given you, if I put $10 million in your bank account tomorrow and it was a business conference, what would you do? And most people answer, I love my business and I would just keep working in business. And I turned around and said, I've actually sat on the board for a thing called Project Gen Z, which we've got a couple of orphanages and sites in Siem Reap and Phnom Penh over in Cambodia. And I'm back there in October, so if anyone wants to check out my sort of social medias, they'll see at Andrew Morello, they'll see the stuff that we do in Cambodia. And this is our 6th year going there. And I reckon if I had the flexibility and freedom to just do that more and more and my philanthropic work more and more, I'd probably do that I probably do it 20, 30% of my time now. I'd probably do it 50, 60% of my time if I could.
Yeah, that's a good why, right? And
Yeah.
it takes a lot of people, and if you're doing this sort of business education type stuff or motivation, it takes people a long time to work it out, you know, and that's okay, right? You don't need to rush that sort of stuff. You know, you don't need to be an overnight success and know exactly why you're doing stuff. Sometimes the journey actually helps you get there, and people sort of get that through property investment as well.
Yeah, 100%. And I think it's what is suitable for one person doesn't necessarily need to be suitable for the other. And I think that's a massive misconception people have. And they think, I've got to go buy myself 10 houses and put myself under all this stress and unnecessary duress. And I try and turn around and say to them, you got to do what makes you comfortable. Obviously, everyone's positions are different. If you've got, a wife, husband, partner, children, and you don't have the flexibility and freedom to take that higher risk, then you should probably just, take it slowly and, buy one property and then slowly acquire the second one and not over leverage yourself. But if you're young and you're ambitious and you've got time and money, and instead of it spending it on buying yourself a flashy Mercedes-Benz or a BMW, go and buy another house. Like you're going to get a lot more benefit out of that in the medium to long term than you will out of buying yourself some flashy European car.
So if you're running the summer, say you're overseas and no one knows you and all that sort of stuff, and someone goes, what do you do? What do you do? What's your job? What do you say? Because I struggle with this.
I do as well.
Because I always go, well, what do you do? And then I'll tell you what I do based on what they do, because I've got so many different things going on, right? So what do you do? You go, I'm a property investor.
Well, I still think my first and foremost answer is property and finance. I talk to them about. I say that it's a staple part of the Australian wealth building strategy. We have, in my opinion, we live in the greatest country in the world, the land of opportunity. It's my opinion, but my family's been investing in real estate in Australia since 1956, and it's done my family well. I've had no handouts along the way, and I've built my own portfolio, but I was brought up understanding that property was a great investment stream, and as long as you were making some reasonably smart decisions, you didn't have to be a genius, you didn't have to reinvent the wheel. As long as you're making some reasonably smart decisions, you could certainly build your wealth portfolio.
So when we come back, we're going to have a chat about Andrew's portfolio and how he's gone about creating it. Welcome back, everyone. Here with Andrew Morello. We're having a good chat. We're trying to work out what we both do, and I think we're both called ourselves property investors. Probably pretty good for pretty good for this particular chat. And you mentioned just before the break that you come from a family of property investors, and your family's been investing since the 50s, but you've never had any real handouts. So you sort of self-made your portfolio. Let's have a chat about that, because I remember when we got together 2+ years ago, we had a bit of a chinwag about it, but I don't mind sort of going back over it. What's it look like today? What's in there? Yeah,
still a few apartments in there, and off the recording before, we mentioned that they probably haven't performed as well as I would have hoped. I bought waterfront apartment when we spoke last. I still owned Campbell Parade, Bondi Beach, and that was in an old Art Deco building on Campbell Parade, bottom floor. That did extremely well. Made about $1 million clear, just under $1 million clear tax free, because it was my principal place of residence for the last sort of 7 years. Yeah. So we were talking about the fact, what other, investment can you make, $1 million tax free in 7 years whilst, having somewhere to live at the same time. So, did well on that one. The other ones that I'm holding on to, I haven't done as well. I've made some margin in it, but not quite a lot. And then the next thing I'm been working on over the last few years is I'm land banking some properties, some family properties, and also acquiring the properties in between down in Moonee Ponds, and just looking at my options in the medium to long term, what I can do with that. I think if there's an opportunity to land bank, it's one of the biggest pieces of advice I give people. If the house next door comes up for sale, even if you don't know what you're going to do, just buy it if you can. It's probably one of the best investments you can make. Being able to have that flexibility on moving fence lines and taking advantage of, local municipality planning opportunities are certainly something that I probably missed 10 years ago when I first got to Sydney. I had friends telling me, I'll come out to Blacktown and you can buy these properties, we can subdivide. We've got 2 or 3 townhouses on. And I was, simple boy from Moonee Ponds, that ironically Blacktown and Moonee Ponds probably looked very similar, but I was living in Bondi, and I said, where's Blacktown? And then I Google Maps it, and I went, that's a bit too far for me to come out to have a look at a property. But in hindsight,
it would have done very well.
It would have done very well, So I always tell people, if you won the number one pieces of advice I give people that are already got investments, whether it's their principal place of residence or an investment property, if it's a house and the places come up next door, generally
find a way to do it.
Yeah, find a way to do it.
It all comes down to when you buy that, what the market cycle is. But then a lot of people say, well, it's largely irrelevant, because if you are land banking is a long-term play.
Yeah.
You're not going to realise that overnight, or it gives you the options to do so. So when you're sort of down this land banking strategy, is it on the basis that you'll do a full development at some point in time? How do you work out when it's time to do that?
Yeah, look, I've advised a lot on this space as well. So I haven't necessarily done lots of land banking in my life because it is something you probably need to be in a position to financially hold on to for a period of time. I've been involved in developments before, and what I've realised there's every opportunity is different, and every time I've advised someone or been involved in a development, sometimes it's better to acquire the land, get your plans and permits, and potentially look to offload to a builder or developer that does it every day. A little joke I have for people is that when the markets are good, everyone thinks they're a property investor and a property developer, but sometimes you shouldn't forget if you're a butcher, baker, candlestick maker, stick to butchering, baking and candlestick making and make good money doing that, invest it into property, maybe use the 50 or 60 or 100 grand of available funds that you might have in an offset account or wherever it might be into getting the plans and permits approved for townhouses or apartments. I'm not a massive fan on your apartments right now, but small to medium density you might be able to get away with a little bit more right now. But in the major cities, they've obviously come off. It's not, you don't have to be an oracle to know that. And I still think in the inner city areas of Melbourne and Sydney, there is a massive opportunity. I think there's going to be a massive opportunity in townhouses again. I think what's happened is next generation sort of got pushed into go buy apartments, and then a lot of them have realised they've had their first kid or second kids on the way or whatever it might be, and they're like, or there's a saturation in apartments now, whether that was the Docklands down in Melbourne or Zetland Mascot sort of areas in Sydney or even parts of Parramatta and so forth. And what they're saying is, okay, what are the other options? Okay, I don't really need a house. I don't have the money to buy a big house. And we even see it in the core market that I grew up in, which is that Moonee Valley district down in Victoria. The townhouses are flying again. They were the first thing to, once that election debacle was all over and that discontent and unknowing was done, the townhouse market sub $1 million just took off.
Is there any reason why you're down? Is it, you're obviously connected to it for us where you grew up, that area, but down there, land banking, that's where you're playing, not in Sydney, is that?
Oh, look, I think it's a great question. I think there's opportunity still in Sydney, but I think you probably need a larger financial runway. As I mentioned, I pride myself on the fact that I've raised my own capital, done my own investments, whether that was mezz funding or direct funding or, classic sort of borrowing and so forth. So I've always done it on my own. And I still think the margin in Melbourne is still there. Like, your value for money and your bang for buck is very much higher than Sydney. Do I still think there's opportunities in Sydney? Yes, there is. But I think it's going to take a lot more education, time, and you're going to need the patience to make sure that you make the right decision.
Well, I was looking at the auction results earlier today and they flew off the shelves this weekend in Sydney and Melbourne. But everyone's talking about Brisbane now as the next big spot. There's a thing I was looking on the internet, on Facebook earlier today, and they reckon that Brisbane's going to sort of spike by 25+% by 2022, right? So hopefully things are going to start moving again. The challenge property investors have is, well, what do you do about it and how do you get money? And I know sort of the work you do with Yellow Brick Road, which amongst a number of things is a provider of mortgage finance. It's hard to get a mortgage at the moment. How are the franchises finding that process? Are they really working hard to actually get people into investment properties?
Well, the good news is that you will see, and go speak, I'm not giving it a spruik, but speak to your local Yellow Brick Road guy, because you're actually going to see over the next 2 to 3 months some lightening of the restrictions. So what obviously happened is we saw under the regulatory bodies and the Royal Commission and changes, and you saw those regulatory bodies bring in some very strict guidelines with regard to serviceability calculators, which was probably the best thing for them to do, because generally, like, I'm old enough to remember 91, 92. I was still a kid, but I'm old enough to remember interest rates at 17%. I'm old enough to remember the dot-com bust in 2000. I'm old enough to remember the GFC. And what ended up happening was we've always traditionally used in Australia our interest rates, our Reserve Bank, to use them as levers to either slow down the economy or speed up the economy, especially when it comes to property investment. What they've gone and done this time is they've used regulatory change, and I think they've actually been able to pull it off. I'm actually fairly impressed, because if they had bumped up the interest rates by 1/4% or 0.5%, you would have seen this two-speed economy effect. You would have seen, obviously, the investors would have just dropped off the market completely. But what they've gone and done is they've used serviceability calculators and said, if you're a first-home buyer or you're a mum and dad buying their principal place of residence, we will give you a more more favourable serviceability calculator. But even now with investors, you've got ANZ looking at dropping down to anywhere between sort of 5.5 to 6.5%, which is what they base their serviceability off. Yeah, their serviceability rate. And, there was sort of mandated 7.5% right across the board, including principal place of residence going on a little while ago.
So it should get easier. I'm trying to get a mortgage right now. It's not particularly easy, but
you need to go see Yellow Brick Road.
I got a pretty good broker, but
it's all right.
it's Hey, I was just going to ask you why'd you get rid of the Bondi place? Is that you moved somewhere else, a new principal place of residence?
It was interesting. My Yellow Brick Road financial planner said to me, he asked me the direct
Yellow Brick Road financial planner. Yeah, they do that as well, right?
He did. He goes to me, do you want to be a rock star or do you want to be rich? And I said, can't I be both? And he goes, nah. So my best move at that time was to offload Bondi. Being an apartment, and certainly I think there's a lot of opportunity in those Art Deco and, as we mentioned before, those red brick apartments and the older, smaller, medium density development sites that have got sort of 8 to 12 maximum apartments in, and that's what I had in Bondi, which was an Art Deco. There are certainly opportunities to add value, but you really don't ever own the land. So my financial advisor did say to me, he's like, if you want to put your money into something that you're certainly going to see bigger returns from in the medium to long term, then certainly, moving that $1 million tax-free into this land banking opportunity was going to give me the biggest uplift. And it has.
Are you worried about never being able to get back into the Bondi market because it's just so bloody expensive down there?
Look, yes, it was a discussion point. The irony is that the lifestyle I live, I probably, it was more of a holiday destination for me, because I'm always travelling with regard to my my speaking, motivational and business and property-based speaking career. And it was a romantic property, and I think I've written a book on property investment before called The Morello Matrix, and there's a whole chapter on it. I say remove the emotion out of buying property. I bought one of the other apartments in Melbourne based on romance and emotion. It was a site that my father did own since 1971, and then we sold it for them to free up some money for my mum and dad's sort of health needs. And I bought one of the apartments there because I said to my dad, I'd be a travesty for a Morello not to own an apartment there. And I bought one of the apartments, and it's been my least performing asset I've ever bought. And so in hindsight, it was just, I bought it out of the romance and the emotion of real estate. And that, my dad had owned this piece of land that was a factory before it was a development site. And, we did the plans and permits and sold it off to a developer. And as part of the deal, I bought one of them off the developer. Yeah. And, I bought it at a good price, but it just hasn't grown. It's literally worth what I bought it for, a number of years ago. So, so don't let emotion get in the way of a good property. Good property.
Well, I actually want to ask you about the Morello Matrix, but before we do that, we'll just go to a quick break. G'day, everyone. It's Phil here. We're back with Andrew Morello, and we'll chat about the Morello Matrix, which is from a book that you put together a couple of years ago.
Yeah.
Is it as relevant today as what it was when you first did it?
It's probably more relevant now that the market's sort of gone through its sort of, I wrote it in a similar market to this, and originally I wrote it to publish, and I'm not going to lie, I thought I was going to make money off it and tour it, but I ended up deciding to, it's my IP, but I ended up deciding to actually give it to the Yellow Brick Road branches so they could then utilise it as an opportunity to speak to people.
Okay. What is the Morello Matrix?
Yeah, the Morello Matrix was just my concept. Look, I don't have a degree in economics or anything of that nature. I should probably, put that disclaimer on there. But obviously, all the things that I learned, the principles I learned in property investment from my father, my brother, and my family, and also my sister's even in the property game. She was project manager over in the UK for 12 years. So I basically took all those principles and put them into something that was easy to read, easy to understand, and it was palatable. And effectively, it's been a great model for people to base it off and to get into the market. And the main message behind it was to encourage people that more is lost with indecision than wrong decision. So, there's a lot of people that I see that I haven't seen for 3 or 4 years, and I bump into them and I'm like, oh, how'd you go? A few years ago, you were telling me that you were looking at buying a place and you came and watched me speak at this conference. And they're like, oh, yeah, we didn't end up buying anything. So I said, so you've been renting the last 3 or 4 years? And they're like, yeah. And I'm like, God, like I know the rents in my places are at a record high. And I know that, that you speak to young people around eastern suburbs, Sydney, paying exorbitant amounts of money for rent. And you say to yourself, geez, like, the money that they've basically blown a mortgage repayment.
Yeah.
You know, the monthly rent that they're paying is currently roughly
mortgage. And if you can service a mortgage and be able to get a mortgage, you know, this is a big challenge with property investors. That I'm going to do it. I'm going to do it. I'm just waiting for the perfect property, or I'm waiting for the perfect time, or I'm waiting for exactly the climate to be, you know. And these are the people that never get into property, and these are the people who miss out on 3 or 4 years of potential growth.
Yeah, they do. And I've seen them, and some of them are close friends. You know, it breaks your heart when you went and spent a couple of hours helping some friends go look at a couple of open for inspections, or you've organised the pre-approval for them and through, you know, or given them some general advice. And then a couple of years later, they're still
done nothing.
And it's, you know, and I can understand that it can be a scary thought for a lot of people, and it is a big commitment. And some people tell me, they go, oh, but what happens if we break up? If it's, you know, I'm in my early 30s, so a lot of people are, you know, either been in a relationship for 3 or 4 years and they're about to get married. And they're like, what happens if we break up? I said, well, you know, like I think we're all fully grown human beings over here. If it doesn't work out the relationship, it's not a difficult thing to get it valued by a couple of valuers or a couple of real estate agents. Take the medium of the two, and while one person buys the other person out, maybe put something in writing up front, have the difficult conversations up front. You know, that's a big question people ask me is, oh, I'm interested in buying real estate, but I don't know whether should I buy it with my life partner or not, or my husband or not. And I said, well, if, you know, the reality is if you're living together under de facto laws anyway, there's risk in doing that anyway, but why don't you just have the difficult conversations up front and put it all in writing, and you know, what happens if it doesn't work out? What if it does work out? You know, will we value the property? It's the same when taking on investors or anything of that nature as well.
So what we're talking about here is mindset, really. How you choose to approach an opportunity. Some people would say an issue or challenge, but how you choose to approach an opportunity. I know you do a lot of work across Australia, speaking with business owners and sort of up-and-coming business owners, and some of the work you do obviously within Yellow Brick Road. What's those sort of key mindsets you see with highly successful entrepreneurs that translate really well into sort of developing mindsets as property investors?
Yeah, definitely. Great question, by the way. Really good question. Something I'm very passionate about. So number one is obviously, you know, what I referred to before, that more is lost with indecision than wrong decision. I think the reality is that we live in a great country, a highly sought after country, and a very safe country. So obviously there's always going to be people that are going to want to come and live here. There's always going to want to be people that are going to want to invest here from overseas. And, you know, the history of Australia, we've used that as a metric and a valve to stimulate the economy when we've needed to. So I don't think we're ever going to really see what we saw in sort of 91, 92, which was a recession. We've got a much smarter government on both sides, whether you vote Liberal or Labor. It's much of a muchness these days, and I think from a policy point of view, they're a lot smarter. So number one is more is lost with indecision than wrong decision. Number two is learning to embrace the uncertainty of it all. Like, I think once you get that mindset shift that, okay, I can't control everything, I'll control the controllables and, you know, make a decision and get in there. So embrace the uncertainty. And then number three is educate yourself. You know, I think the more educated you are, and people go, oh, but you know, I'm not as smart as you. I go, man, I wrote a best-selling book and I can barely spell. Like, you know, I grew up in Moonee Ponds in Melbourne. I went to a Catholic all-boys school. I never went to university. I didn't study an economics degree, but I could sit there and talk economics with some of the best. And I've surrounded myself and listened to great podcasts and read great books. And you know, it's not hard to pick up the newspaper or pull out your phone and see what's happening in the world and listen to the financial reports to get at least a bit of an idea, to give you a lot more confidence in, is this the right time for me? Because that's the other, I think, last part of it as well, is it's not a question, is it the right time? It's, is it the right time for me? If you've got the position to do it, if you're in the position to do it, then make the decision, take the risk, embrace the uncertainty of it, and make the magic happen.
So you reckon it's just drawing on the great Australian trade of just have a go, just have a crack at it, and you're generally all right?
Yeah, definitely. Like, you know, the reality is, like, even my apartment, you know, the one that I mentioned before, that was an emotional buy that hasn't performed, hasn't done badly. Like, I've got an income throughout the whole time for that property, number one. And number two, let's say, God forbid, worst case scenario, I do take a small hit on it, because I did look at potentially offloading it. At this stage, it's just sitting idle, but I did look at potentially offloading it.
Where is it?
It's in Kensington in Melbourne. So It's only 3.5 k's from the city, and it's one of the sub penthouses. So, like, you know, you'd think it was a bit of a slam dunk, but what's happened in the Melbourne CBD is they've just had such a phenomenal influx of these towers that are fairly good quality towers. Like, some are not good quality. I'm not going to mention names, but there's a lot of them that are reasonably good quality, good sizing. And so all of a sudden, if someone's buying sort of a 2 or a 3 bedroom in the CBD and they can pick up that for 700, then they're not going to really go look, 3.5 k's out of the city, out in Kensington. Even though it's around the corner and not far, you literally can get from that Kensington property to, I use sort of the Crown Towers as the centre point of Melbourne CBD. Get off at the Power Street exit. You can get there in about, I reckon, 9 minutes. 9 minutes and you're in the city. People ride in, they walk in from Kensington. So
it's just about holding on to it until a point in time when it becomes in demand, right?
Yeah, and I'm sure if I hold on to it for another 20 years, then it will. I'm sure it will perform well in the long term. But just from a leverageability point of view, which is one of the big components of the Morello matrix, as we mentioned before, I haven't been able to leverage off that property. Bondi was very leverageable for me. Kensington up here was very leverageable for me, and then my Melbourne investments were leverageable, except for that apartment.
Well, I've enjoyed the chat, Andrew, and let's get you back on once let's not leave it so long.
Oh, well, cool. It's been a pleasure again, and thanks very much. And hopefully I'll see the team, and if anyone's got any questions, they can feel free to contact me direct through the social medias.
That's cool. So if people want to connect in, what you're up to, just where is it, at Andrew Morello, is it?
Just at Andrew Morello. On Instagram is probably the best one, but I'm on the Twitter and also the Facebook. And also if they're interested in sort of the business education stuff, the-entourage.com.au.
All right, nice one, mate. Well, thanks for coming in. Thanks for the chat.
Great. Thanks very much.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, say the first to know what's happening in property and property investment right across this great nation that Andrew's spoken about, smartpropertyinvestment.com.au/subscribe, right across social media as well, just Smart Property HQ across all the social channels, if that's how you like to get your info. And I always get a lot of people saying, hey, how can I help you, Phil, with the podcast? There's one thing you can do for us, just leave those 5-star reviews wherever you listen to this, whichever podcast player. We do really appreciate it. There's more than just me here speaking behind the microphone. There's a really talented team of producers who make this stuff happen, and they get a real kick out of it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.